Greetings. Welcome back to IBI, India Business Insights. Recently, the US Federal Reserve continued its restrictive monetary policy stance by raising the key interest rate by a further 75 basis points for an unprecedented fourth time in a row. How might this change affect Indian markets and consumers? Keep watching to find out more. To keep yourself abreast with news and get regular insights on the Indian economy and business, please subscribe to our channel and click on the notification bell. India's forex reserves dropped by $3.847 billion to $524.52 billion for the week which ended on October 21st. The overall reserves had dropped by $4.50 billion to $528.37 billion in the previous reporting week and have been declining for many months now. A Reuters poll recently showed India's forex reserves were forecast to fall $510 billion from around $525 billion by the end of this year. India's central bank is beginning to add to its stockpile of foreign exchange assets, yet again after valuation changes. Periodic market interventions caused the reserves to shrink about $100 billion from record highs late last year. India's foreign exchange reserves have recorded the highest jump in the last year to $531.08 billion. After 12 weeks of the downtrend, the forex reserves have surged by $6.56 billion for the week ending October 28, shows the latest data released by the Reserve Bank of India. The uptrend has been aided by various measures by the RBI taken, including selling dollars of more than $118 billion to arrest the slide of the Indian rupee. But more than the RBI selling dollars, it was the rise in the value of the gold that has helped the rise in forex reserves, according to many economists and forex analysts. This is important as high forex reserves aid in building positive sentiment among investors in general. Moody's, the credit rating agency, slashed India's growth forecast to 7%. This is the second time that Moody's Investors Service has cut India's growth estimate. In September, it had cut projections for the current year to 7.7% from 8.8% estimated in May. Both the IMF and the World Bank also revised their GDP growth projections downward to 6.8% and 6.5% respectively. However, another forecast by Morgan Stanley predicted that India will account for a fifth of total global economic growth in the next decade. The report titled, "Why This is India's Decade," forecasts that India's GDP is set to double from the current $3.4 trillion to $8.5 trillion over the next decade. India will add more than $400 billion to its GDP every year, a scale that is only surpassed by the US and China, the report said. The RBI has drawn down about $118 billion from its currency reserves, from a peak of $642 billion over a year ago. The rupee has fallen nearly 12% during the same period. It touched a lifetime low of 83.29 per dollar on October 20th. However, as of November 11, rupee ended 101 paise higher, marking the biggest single-day gain in 4 years, from its previous close to end at 7-week high of 80.80 versus dollar. Consumer Price Index shot up to 7.4% while wholesale inflation fell to an 18-month low of 10.7% year-on-year in September due to broad-based casing of pricing pressure and helped by a high base a year ago. The divergence is caused by the difference in the composition of both indices. CPI is far more sensitive to food prices than WPI. Similarly, WPI has a lot of industrial inputs and products, whereas CPI has elements such as household services, which are not included in the WPI basket. High and persistent inflation worldwide and the contradictory policies by central banks are depressing economic activity, dampening household and business confidence worldwide. Also, India's retail inflation or consumer price index fell to 6.77% in October, the lowest in 3 months, from 7.41% a month back. Official data showed on November 14th. The annual rate of inflation based on All India Wholesale Price Index number was also 8.39% for the month of October 2022 against 10.70% recorded in September 2022. Data on sectoral deployment of bank credit for the month of July 2022 collected from 40 scheduled commercial banks accounting for about 93% of the total non-food credit deployed by all scheduled commercial banks are set out in Statements 1 and 2. On a year-on-year basis, non-food bank credit continued to expand, registering 15.1% growth in July 2022 as compared with 5.1% a year ago. The overall exports in April 2022 to August 2022 jumped by 19.7% as compared to the same period last year. Non-petroleum and non-gems and jewelry exports rose 8.5% to $135.6 billion in April to August 2022 as compared to the same period last year. Merchandise export grew by 1.6% at $33.9 billion in August 2022 as compared to the same period last year. Tobacco 76.4%, oil meals 73.7%, electronic goods 50.8% and rice 46.3% record high export growth during August 2022 as compared to the same period last year. Exports grew by a modest 4.8% year-on-year to $35.5 billion, while imports increased by 8.7% year-on-year to $61.2 billion. Trade deficit narrowed to $25.7 billion in September. The government proposes to spend 39,44,909 crores in 2022-23, which is an increase of 4.6% over the revised estimate of 2021-2022. In 2021-22, total expenditure is estimated to be 8.2% higher than budget estimate. The receipts, other than borrowings in 2022-23, are expected to be 22,83,713 crores, as an increase of 4.8% over revised estimate of 2021-22. In 2021-22, total receipts other than borrowings are estimated to be 10.2% higher than the budget estimates. There was a sharp decline in rural, urban as well as total unemployment rate in September 2022. This has been attributed to the festive season and seasonal agricultural operations. India's unemployment reached a low of 6.4% in September 2022, down from 8.3% in August 2022. Urban unemployment rate fell to 7.7%, while rural unemployment declined to 5.8%. Online hiring activity in India picked up pace with a 12.7% year-on-year growth in September 2022 as indicated by Naukri Jobs Peak Index, the second highest level after all-time high in July 2022. Additionally, the demand for work under Mahatma Gandhi National Rural Employment Guarantee Scheme also rose marginally, 5% in September 2022 as compared to August, year-on-year growth lower than September. Consumer confidence among urban Indians dipped in November due to the rising inflation and cost of living, according to the monthly Refinitiv Ipsos Primary Consumer Sentiment Index. Most retailers reported healthy demand for their goods during festive season. However, the possibility of a slump in demand post-festivities remains a concern for manufacturers. The overall negative consumer sentiment can be attributed to the rising cost of living. Consumer sentiment has dipped in November 2022 due to the rising inflation and cost of living. Here, we focus on frequency indicators that are related to consumption such as UPI payments, IMPS transactions, cash withdrawals, and electricity demands. UPI payments, IMPS transactions, and cash withdrawals have shown positive trends. However, the electricity demand fluctuated. Indian markets made advances. Nifty and Sensex were up by 1.2% and 1.10% in the last week of October. Rupee bonds gain on hopes of Federal Reserve slowing rate hikes. India likely to see biggest jump in energy demand globally, and India's textile sector eyeing $100 billion exports in the next 5-6 years. Thank you for watching. If you liked this video, let us know in the comment section below.